The market last week gave some incredible opportunities, and if we just do a quick recap before we go into what we're looking ahead at, we had a tremendous week trading, and it was rounded up with a really great day, a good, strong finish to the week, and all stuff that was talked about on this channel and for the TradingView community. As I say in most of these videos, I do a gold chart of the week analysis at the beginning of each week before the market opens. You can follow these under analysis at latest analysis. You can follow me at Ross J. Burland, FX Street. And this article gives a nice summary of what we're looking at ahead for the week that can affect the gold price and the US dollar, encompassing most of what lies ahead. In terms of gold, we finished up around about 65. This was something that we talked about in this article, again, written before the open of last week. We talked about why we were targeting down there. So if you want to grab that article, it's all there. That's the article title, and I'll be writing the same for this week ahead. Now, the target was achieved. On the YouTube channel, we talked about the trade setup for the day ahead before the non-farm payrolls and services hit. We talked about what to expect from the data, how it might impact the markets, and our target specifically for gold and the euro. And there's the gold video there. We talk about how the target was hit. And I believe I talked about the euro as well and how it could have been traded. In terms of the euro, we talked about the pump up for the dump, and there we had it. It's run nicely lower. At the start of the week's video, the same as this will be for this week, which is highlighted on the channel as the welcoming video, the week ahead, dollar, gold, Aussie, etc. It was all talked about, it was all documented here, and we talked about the bias for a stronger dollar, and that's exactly what we got. That was the week. We ended strong for a move up into the bearish impulse as expected, and lo and behold, it played out, breaking the trend line, supported in here. This was all documented, talked about in the video, and I write continuous articles for FX Street in the news section. So do follow me at FX Street for timely, up-to-date news that is affecting the US dollar, for instance. So on a continuous basis, day in, day out, I'm writing articles about the dollar, the Aussie, and so forth. But this is a nice summary video to start the week, and I write continuous videos on important price movements, predominantly technical analysis, my outlook, trades that I take, ones that work, ones that don't work, what to do about the ones that haven't worked, etc. Such as this one over here. I actually got a comment from someone saying, how could I lose money on such a day? It was a day to double your trading account. And I responded to that. I'm not sure what video it was. But that's great. I love the feedback, and if any way I can help, I will. This one in particular is about the Dow that I initially shorted I think it might have been the S&P, I believe it was. Shorted the S&P I missed the move in the Dow, which I predicted, but I didn't get in on it. In hindsight, I could have done on a lower time frame, but there we go. And I took the S&P instead. It didn't pan out, but losses are part of the game. So I replied to that. You're welcome to go and read that. Um, it's not about trying to double your money on one particular trade, um, and it's about how you manage your risk. You can't double your trading account if you're managing your risk effectively. So I don't mind if I lose a trade. If I leave 0.5 of my account, who cares? It doesn't matter. We go on to make trades that make 2, 3, 5 R, um, and continuously. So, losing 1%, if I decide to risk up on a trade, because I'm sure which I did on the S&P, and on this day we ended down around about 0.5%, having one of turned it around by going the other way based on market trading strategy rules, etc. And we managed to recoup the losses on the day. So anyway, I digress. But it's all there. Everything I do is documented, wins and losses, on the YouTube channel. You get some golden nuggets. I don't hide my strategy. I try to benefit the community. That's my role at FX Street. So again, you can follow me at FX Street, and we will now continue for the week ahead. So it was a great end to the week. We predicted this dollar higher. We predicted gold lower. We predicted the euro lower. We got this trade in here and so forth. And I talked about how that was executed on the channel. And for the week ahead, then, so we have um, Fed speakers. That will be an important theme considering what happened with the services and a blockbuster non-farm payrolls um, that followed what the market took as a dovish outcome of the Fed. So it's all going to be data dependent from here on, and Fed policy forecasts that will be a good indicator for us to lean on, um, and so forth. What we do know between last week and Fed speakers coming out this week, um, they may not have a particularly a higher terminal rate, but they're certainly not about to put the brakes on. So let's see how that pans out. In terms of the events, we have as again Fed speakers. Um, Nothing really jumping out to me here. UK GDP and the RBA decision as the main highlights for the week ahead. Now, I like to use the dollar as a crutch, really, and an indicator for forex, gold, risk sentiment. So we're right up into a resistance area. It's a strong weekly close. We're on the backside of the bearish trend that is officially broken. We broke structure, this consolidated phase over here, having completed this move, the spring for a move up. That's not to say that we can't come back down into here, consolidate and move higher, if indeed the market runs with a hawkish sentiment, so flipping the script, the narrative. Nothing really jumping out to me in terms of the formations on the 4-hour chart, only that we could move a bit higher. We've got liquidity over here, so this could run up a bit higher. If we look across at the euro, we see that we've got new time frame traders into the market here, chasing the breakout We've pierced below last Tuesday's low, which was the low of will be the low of last week. So we've got breakout traders. So we might see them, the bears getting trapped for a move up. If we pull this back a bit to say the daily, we can see that we're now. Sorry about these charts being a bit of a mess. I just want those drawings on there until I tidy it up. I'm just basing on those for the time being. So we'll get rid of the Fibos, etc. So we're breaking through what was meanwhile support. Pretty strong move. Very strong move. We've got critical support down at 107, call it 107.70. So we could see a continuation before the pullback and the rolling over for lower. We're on the back side of this trend. So the bias is bearish. We've had these red arrows indicate daily closes. So we've had 2 red daily closes. This looks pretty bearish to me. So we'll just see how this pans out, but lower for higher and then lower. Would be my thesis on that. On gold, if we go back to this last week's analysis, we talked about, if we just bring this up here, we can see that obviously this is now all broken. So we've broken the structure. We've even broken this trend line down here. So, but this 1,000 pip box, 1825 the lows. I'm not saying that that's going to be achieved this week by any stretch of the imagination, but we're resting around about 1867, the top. So we're at the top of the bottom third of this 1,000 pip box. So that's something to bear in mind. So we can move up, but ultimately we're looking to come lower. So if we bring it over to live charts, let me draw this all out. So this is the schematic, resting at the top of this upper third of this 1,000 pip box. We've now broken this major trend line. So we'll move that to signify it's been broken. Change the color to red because we're bearish below these trend lines now. All these trend lines back here as well. So yeah, so that's them all drawn in. Support. We talked about the 3-line strike, the bearish momentum candle, and it being blowing off. So we've got bears in the market. There's potential here to head lower into 1850. We are starting to see a pause in the momentum. This could well roll over from here to the downside, or we could be moving up in a correction of the impulse. We can draw our fib on that into the 38.2. Might have a confluence with something over here. It kind of does. We can draw that across. As a potential resistance area if there were to be a correction. Get rid of these trading. So that would be the bias up into the trend line, the counter trend line, the prior week's lows over here. So we've got that confluence of prior week's lows, 38.2 as a target, around about 1880-ish, round number for 1850. On the downside, a little bit lower, clearing out some stops, stale stops. So there's still plenty to go to the downside on this, and it all depends on um, Fed sentiment, really. And we've got Powell, Waller, Williams all speaking, and they'll likely emphasize on the non-farm payrolls report and inflation um, pressures. So that would be expected to be supportive to the US dollar yields. And then the theme of a hard landing could rock risk sentiment, playing into our thesis of a higher dollar again. And then we will have the RBA this week as well. Now, we talked about Friday's trade for the downside. It was a first red, there it is there, it's all factored in. It was a first red day opportunity for the US session. It was on the front side of the downtrend, and the bias was lower into the trendline support, which played out very nicely. Wasn't taken by myself. I was concentrating on gold and the euro. Anyway, so that played out well. You can't. I mean, you can. I mean, you can double up your risk if you want, but it's not advisable to be going the same way on everything. So pick one, your favorite, based on what's looking good as a setup that ticks all the boxes. Aussie was one of them, but I just preferred gold for the day. And anyway, so looking ahead, now the RBA is anticipated to rate not only once but twice in a row. So there is a bullish bias for the Aussie. Besides dollar strength, US dollar strength coming through, with China consumption likely picking up due to the rapid lifts of COVID restrictions, that could play into the Aussie as supportive in terms of its surplus and commodities trade with China. Um, but difficult to say really now with what happened on Friday. I think really the main driver is going to be the Fed sentiment. But standalone, the Aussie has been the top performing G10 of late, and I don't see any reason why that can't continue. Um, but we'd be expecting a correction at this point to the upside ahead of the RBA at some point. 68.70s maximum. I think this could drop to before the event if there were to be something to push it down there. So that supportive area over there. This is all now resistance. So if we do get a pullback in the US dollar, then that can continue a little bit lower. So we'll wrap it up there. And I wish you all a great week ahead, and we'll keep the updates coming.